Ever felt like your savings account barely moves? You put money in, and a year later, nothing much changed? If you're in the US, this feeling is real because the average bank savings rate is often less than 1% per year, according to data from the Federal Reserve. Meanwhile, everyday expenses, things like rent, food, transportation, tend to rise by about 3% or more each year. That's measured by official inflation statistics from the US Bureau of Labor Statistics. That means if your money only earns 0.5% while prices go up 3%, you're actually losing purchasing power over time, even though your balance looks bigger on paper. Sound familiar? Let's break down why that happens. In plain language, when you deposit money in a regular bank, here's what happens. The bank takes your money. They lend it to someone else, maybe a business or a home buyer. They charge a much higher rate to that borrower. Then, the bank keeps most of the profit and gives you a tiny share. Imagine lending your bicycle to a rental shop. They rent it out all day. People pay them $100 for the rental. At the end of the day, they give you $1. You might think, hey, at least I made something, but is that fair? That's how traditional banking works. Then, decentralized finance came along. The idea was simple. What if the system didn't need a middleman? What if the software itself managed our money? It worked for some people, but for many people, it also sounded complicated. You had to understand different networks, bridge assets across platforms, learn new terms, manage wallets and keys for most everyday savers. It just looked confusing. So even though the promise was real, many were left on the sidelines. Superform is a different approach. It's like a user-owned digital bank, but built on transparent software instead of behind closed doors. Here's what that means in real simple terms. You deposit your assets like USDC, ETH, or BTC. We'll define those in a minute. Superform routes your money into strategies designed to earn yield. Your money stays under your control through software. You can check anytime. No middlemen, no opaque layers, no hidden logic, just clear, verifiable earning power. Now let's talk returns, which your banks often give less than 1% per year, sometimes closer to 0.1%. Superform targets around 10% to 14% per year on assets like USDC, ETH, and BTC. Here's what that looks like in real math. $1,000 in a savings account earning 0.5% becomes $1,005 in 1 year. $1,000 earning 10% becomes $1,100 in 1 year. That's about $95 more in the same time frame. Wait, what are these assets? Here's quick breakdown for non-crypto users. USDC. This is basically a digital dollar. Every USDC is meant to be worth $1, backed by actual reserves. Think of it like a secure digital cash you can use online. ETH and BTC. These are widely recognized digital assets that people hold. Similar to digital gold, you don't need to know all the technical stuff. Just know that many people choose to hold these as long-term value. Superform doesn't make this complicated. It lets you earn on them. This isn't about speculating or gambling. It's about using your money more efficiently. It's about your paycheck, your savings, your goals, your future. If your money grows slowly, it just sits there. Inflation eats away at it. Opportunity passes. But if your money earns a meaningful return, that gap closes. Your purchasing power grows. Your goals get closer. Superform isn't another trading platform, a speculative gimmick, a promise without transparency. It is a way to earn more than traditional savings. A setup where you own the process, a system you can verify, not just trust. Banks can freeze funds, decide to give you less return, hide yield sources. But with Superform, it's all on software you can inspect anytime. If you want your money to do more than sit there, if you want yield that actually makes a meaningful difference, then earn more on USDC, BTC, and ETH by depositing into SuperVaults and begin owning your financial future. Links and resources will be in the description and comment section. See you at the top.